Have you ever looked at your monthly expenses and wondered, am I paying for something I don't actually have to pay? If you're retired or planning to retire soon, that question could be worth thousands of dollars. Over the years, I've spoken with countless retirees who worked hard, paid their taxes, followed every rule, and still missed valuable exemptions, credits, and cost reduction programs simply because nobody ever told them they existed. Today, we're going to walk through 5 common expenses that many retirees may be able to reduce, lower, or even eliminate depending on their age, income, location, and personal situation. These are not loopholes. These are legitimate programs, exemptions, and government-approved provisions that have existed for years. And if you're eligible, they could put real money back into your budget. Before we begin, remember that rules vary by state and individual circumstances. Always verify eligibility with your local tax office, the IRS, Social Security Administration, Medicare, or a qualified professional. Now let's get started. If you own your home, this may be the biggest opportunity on today's list. Several states, counties, and municipalities offer special property tax benefits for older homeowners. Depending on where you live, these programs may be called senior homestead exemptions, property tax freezes, circuit breaker programs, senior assessment reductions, property tax deferral programs. A few years ago, I spoke with a retired teacher who had lived in the same home for nearly 3 decades. Her mortgage was long gone. She paid every bill on time, but she never realized her county offered a senior property tax exemption. One simple application reduced her annual property tax bill by more than $1,000. The program had been available for years. Nobody had ever told her about it. This happens more often than you might think. In many locations, these benefits are not automatically applied when you reach a certain age. You have to submit an application. Some jurisdictions even allow limited retroactive claims, which means previous overpayments could potentially be refunded. The exact savings vary dramatically by state. In some areas, the benefit may be a few $100s annually. In others, it may be several thousand. If you're over 65 and own your home, contact your county assessor's office and ask, "What senior property tax programs am I eligible for?" That one question could be extremely valuable. This is one of the most misunderstood issues retirees face. When you're employed, taxes are usually withheld automatically from your paycheck. Once retirement begins, things change. Your income may now come from Social Security pension payments, IRA withdrawals, investment income, and withholding may no longer perfectly match your tax situation. I've seen retirees receive unexpected notices simply because they didn't realize estimated tax rules worked differently after retirement. What many people don't know is that the IRS provides certain relief provisions for taxpayers experiencing major life changes, including retirement-related circumstances. In some situations, taxpayers may request consideration for penalty relief if specific requirements are met. The key point is this: don't assume every penalty is final. Review it carefully. Discuss it with a qualified tax professional. There may be options available depending on your circumstances. Even better, taking proactive steps with withholding elections can often help prevent future issues altogether. A few minutes spent reviewing your withholding today may save a lot of frustration later. This one surprises people every year. Many retirees assume all states tax retirement income the same way. They don't. State rules vary dramatically. Some states exempt certain retirement income entirely. Others provide partial exclusions or deductions. Depending on where you live, favorable treatment may apply to Social Security benefits, pension income, IRA distributions, 401k withdrawals, certain annuity payments. I once reviewed a situation involving a retiree who discovered that a retirement income exclusion had not been properly claimed for multiple years. After reviewing the rules and filing amended returns where appropriate, a significant amount of money was recovered. The lesson? Never assume your state return is automatically optimized. Take time to understand your state's retirement income rules. Even if you work with a tax preparer, it helps to know what benefits may be available. A quick review of your State Department of Revenue website could reveal opportunities you didn't know existed. Many retirees are surprised to learn that Medicare premiums can be influenced by income. Specifically, Medicare may use income information from prior tax years when determining certain premium adjustments. This can create a situation where someone recently retired is paying premiums based on income earned while they were still working. I've seen people retire, experience a major drop in income, and continue paying higher premiums simply because Medicare was looking at older earnings data. Fortunately, there is a process available for individuals who experience qualifying life-changing events, including retirement or significant reductions in work. When applicable, updated income information may be submitted for review. If approved, future premiums may be adjusted accordingly. The important takeaway is simple. If your income has changed substantially since retirement, review your Medicare premium determination carefully. You may want to contact Social Security and discuss whether a review is appropriate for your situation. Let's finish with the easiest one. Every year, many retirees spend hundreds of dollars preparing relatively straightforward tax returns. For some households, that expense is entirely worthwhile. Complex tax situations often require professional assistance, but many retirees have returns consisting primarily of Social Security, pension income, retirement account distributions, standard deductions. For eligible taxpayers, the IRS sponsors free tax assistance programs that have been helping Americans for decades. These programs include Volunteer Income Tax Assistance, VITA, Tax Counseling for the Elderly, TCE. Many volunteers receive specialized training on retirement-related tax topics and help eligible taxpayers complete returns at no cost. I've met retirees who saved hundreds of dollars each year simply by switching from paid preparation to one of these programs. If your tax situation is straightforward, it's worth exploring whether a free service is available in your community. Final thoughts. Let's put this all together. Property tax programs, retirement income tax exclusions, potential Medicare premium reviews, tax penalty relief opportunities, free tax preparation services. None of these ideas require complicated investment strategies. None require moving across the country, and none require taking unnecessary risks. They simply require awareness. One of the biggest challenges in retirement isn't earning more money, it's making sure you're not paying more than necessary. This week, take a few minutes and review these 5 areas. You may discover savings opportunities that have been sitting right in front of you all along. And if you found value in today's video, make sure you subscribe to Decoding Finance, because every week we break down complex financial topics into practical, easy-to-understand guidance designed to help you make more informed decisions with your money. Thanks for watching, and I'll see you in the next video.